Good morning all and welcome to today's video. So today I have three pairs on watch and those are Euro dollar, Aussie yen and Aussie CAD. I took dollar Swiss off of watch and I shall just quickly touch on why before I break down my pairs. So if we just jump to the lower time frames, well, we know that we just tapped into that low, we pushed up and I was looking for continuation to the upside. Okay, because we had this with this 1, 2, 3, okay, which tapped into this area of value and retested the back end of that. And I said that I was looking for a continuation to push higher, okay, like that. And this is a prime example, once again, of why we wait for this, because if you were to just try and get long in here, we didn't get, a flag like that I can see anywhere. And we moved up correctively, okay? So that gave me the clue that either we were forming some kind of larger continuation like that to mimic perhaps the depth on the left. We know that the market often gives us symmetry. That's what Mark Douglas talks about in trading in the zone. Okay, either we were getting something like that before pushing higher, or price was just not going to commit to the upside. And I said to you that I couldn't see price correcting and then just dropping out. And I also said to you that the market can do anything at any time. Okay, so you have to be neutral in trading. And so the question I asked myself is, well, why did it just drop out like that? Well, we didn't get the correction afterwards. That was the first clue. We didn't get this. Okay, price moved up correctively, and that implies either this or that we're just going to drop out, which is why I didn't get long on this pair. If we just zoom out, excuse me, if we just zoom out, you can see that we did have, this was a bit of a, it was a bit of a high test, but high test stroke doji, okay? And it was also bearish, the previous daily close. Okay, so yesterday we had this kind of doji high test candle there, but a bit of indecision and it was bearish. So a lot of the time what can happen is the wicks below these bearish candles can be filled before price moves to the upside. So that's one possibility. Okay, and one of the reasons that, and on the flip side, we get the same thing. I've talked about the bullish wicks that get filled before we move to the downside. Now, one of the reasons the longer this kind of goes sideways, this overall correction, it kind of adds fuel to the theory that we may be seeing a move up to there, and that this may be a reversal area, because the longer this corrects sideways, okay, we would have more of this structure like that, okay? And we know that the market likes to move in parallel, and that would imply that this is an area of reversal, because you can see we sold off quite aggressively from that area last time around. So price might just be messing around. It may be filling this wick. Typically speaking, if a wick is going to be filled for a move to the upside, let's just get all that drawing off the chart. If a wick is going to be filled for a move to the upside, usually there would be a bit more of a scoop like that between the between the touches. Okay, we don't normally just see sharp move down, sharp move up, sharp move down. That tends to imply a bit more erratic price action, because obviously the reason we look for the scoops, one of the reasons is that obviously the longer this takes to get back down to this area, if it is going to scoop round to go back up, and we often see that after a 1, 2, 3, that gives price chance to build volume. Okay, and enough chance for stop orders and limit orders to be placed below here. If it just moves up sharply and moves back down, that doesn't give give the market much chance to, for orders to be placed here. Okay, so just going to let this. It's not clear to me what dollar Swiss is doing, and as I said previously, if it's not clear, then we just leave it alone. It's as simple as that. Okay, so that is dollar Swiss. That's why I took that off of watch. So euro dollar. This is much more straightforward. Okay, so on the higher time frames. So on the higher time frames, we have this area of consolidation here. We tap into it by way of this structure here. And then we have that corrective middle section, okay? So that gives me a clue that this is a completed piece of structure. We tap into an exchange of volume, which caused a big runoff to the upside. So there's no need for us at this moment in time, unless structure higher up gives us a different picture. No reason for us to come down to test these lows. We also have an exchange of volume here, We tap into it by way of a 1, 2, 3. Okay, second touch breaks above the first touch, but doesn't tap into the area of volume. The third touch breaks above all of these, taps into it, and then we see a big runoff. We then reject, we have all these near misses here to this low. We come down, we take out all these near misses, break just below, as we often do if we're going to move to the upside, and then we move up aggressively. So these are psychological patterns. If you're new to the way we're trading, these are all psychological patterns. And if I had a little bit more time, I could explain that psychology, or much of it. We don't need to understand all of it, but these are most definitely psychological patterns that we look for. And then we have this here. We have this exchange of volume, and the paintbrush tool is playing games again. Right. Exchange of liquidity, where there was a bit of a sharp sell-off. We get to that area. We near miss to it. Okay, we break above this high. Second touch, first touch, third touch breaks above all of these, taps into the area of volume, and then we sell off aggressively. Okay, just speeding up a little bit. Now, if the dollar Swiss looks a lot like the DXY, okay, and the DXY is the inverse of euro dollar, okay. Now, if we're going to see, so on the DXY a minute on dollar Swiss rather a minute ago, I was talking about how we might see a move to the upside. This is actually the dollar index, but it looks very, very similar to dollar Swiss. If we're getting that on the DXY, okay, for a reversal from that area, which we near missed to last time around, then on euro dollar, we would likely see, which is the inverse of the DXY, we'd likely see something like that, okay, which taps into there and then moves to the upside, okay, because we have that sharp move there. So that kind of makes sense for us to try and look to get short on euro dollar, particularly when we have, if we just separate the structures. So we tapped into that area, we moved down, you can see that we're clearly in a run of momentum. We have the impulse correction continuation, and then we are going from correction in correction, most likely because this is a reversal area where we'll reverse at this area of value there. And if we just separate the structures, you might be thinking, well, it's moving down correctively. Well, it is, but we can kind of separate the structures, okay? So if we could just take this off the chart now, just seeing that as a bit of a wick. What we do have is we have, let's try that again. So we have that kind of, we have that 1, 2, 3. Okay, we push to the downside, we break the low of this, then we form a separate structure. If I just drill down to the 1 hour, this might make a bit more sense. Okay, so we have this 1, 2, 3 after we break out of all of this, but notice we have a sharp hook point set up just above where there's likely liquidity, and that's probably why price doesn't commit. It comes back up, taps into the area, and then we have this expanding pattern and this 1, 2, 3, which taps into the sharp hook point. We move down. So I'm just separating the structures, which is what you would have to do if we're, potentially seeing a reversal from that area, because we go from corrections into corrections. So we have to be able to separate the structures, and this is partly where the skill comes in, okay? So then you can see we have a separate structure here. So we've washed out all of the liquidity that was above these highs and this sharp hook point. And now we have a separate structure. We have a similar thing again here. Okay, we have this kind of 1, 2, 3. We tap into that area, but we don't break above it. We wick to it and not through it. And also we have a little area of consolidation sat just above, which price may tap into. So probably the reason why it's coming back up is either there's orders sat just above here, and if we do tap it into that area, we'll likely tap into that area as well, okay? And then push to the downside. The fact that we're getting a bit of a consolidation just below here gives me reason to believe that we will tap into that area and push to the downside, because these tight consolidations just below an area of value usually give us that kind of inverse head and shoulders pattern like that, okay? And for that to happen, obviously price would need to break a little bit higher, which you can see it may be starting to do now. But as a minimum, what I'll be looking for today is the following. So I like this. This is at the top of my list because we've got structure. We've got lower time frame structure to work with. What I'll be looking for We'll just take that off. I'll be looking for price to tap into this area, which it looks like it's about to now. I'm just going to remove, that was an old alert because I haven't had this on watch for a little while. And what I'm going to do after this video, not during it, I'm going to set a Google Calendar reminder to remind me to check this pair now that we're actually at the area of value. Okay, but what I'll be looking for is price to tap into this area, which it looks like it's literally just about to do. I'll be looking for a 1 hour push down, a solid impulse down on the 1 hour chart, followed by a 15-minute correction. So that's 6 to 8 corrective candles on the 15-minute chart. And then if the 15-minute structure was, if the 15-minute consolidation was structured, I would look to filter this on the 5-minute chart, and I'd be looking to get short with a risk entry within the correction. And if I couldn't get that, I'd just get short on the break. And as you can see, I would easily be able to manage it down to this low for something in the region of 6 to 6.5%. What I like about this pair is that, typically speaking, if we move up with aggression, we will likely move down with a similar level of aggression as we moved up. And then my higher time frame target would be this sharp area of value there. And of course, if we got down to that area, there's something in the region of 10 to 11% profit potential. And what I would do in this instance is I would use the mechanical management system, and I would measure from there to there. Okay, and I would set a take profit there at the 90% rule, where we typically see sharper pullbacks, while simultaneously I'd be trailing my stop loss accordingly. So that is euro dollar. That is what I'm going to be looking for from that pair. And moving on, so Aussie yen is next up. Okay, so Aussie yen has just been absolutely skyrocket into the upside. So what do we have here? The first thing that stands out to me is we have a very, very sharp hook point there that we sold off from aggressively from last time around. We have a near miss to it, 2 near misses to it. We have a near miss to this area of consolidation, a near miss to this area of consolidation, and a near miss to this area of consolidation. The more of these we see, the more likely it is that we will take all of these out. Okay, we see a similar thing on the to the downside. Okay, we have a sharp move here, sharp move down, which caused a very aggressive move to the upside. We near miss to it, we near miss to that. We have all these near misses, and then we tap into this very sharp move, and we'd rocket to the upside aggressively. What I like about this is we're now trading above here, and above here. So it looks clear to me that we're moving to the upside, perhaps to take out this high, which this high near missed to, and all of these other highs which keep near missing, and potentially take out that. And if we move to the upside there, we would have this, and then we would have this kind of structure where we end up with this. Do excuse the drawing, but we would have that 1, 2, 3, and then we could potentially be looking for shorts from the top there. But all I'm interested in at the minute is that we've had that solid rejection from a sharp area of value, which we sold off from aggressively last time around. And once again, just as I said with euro dollar, if we do move down aggressively, then we will likely replicate that on the way up. You can see a fair level of symmetry about this move already. Okay, and I like the fact, just to touch on it, that we have retraced more than 50% of the length for this move. So that gives me reassures me that this is potentially not some kind of larger bull flag to push lower like that. Okay, if we've retraced that much on a pair such as Aussie yen, then that gives me confidence that we're likely moving to the upside. So what I'll be looking for from this pair is the following. Okay, there was a forecast on the screen. Okay, that's vanished. Work that one out. There we go. We're back in business. So what I'll be looking for, we have the 1 hour impulse up now. This little low here may act as a base. If we just keep going, you can see here, I'm just looking for, we have a wick there that may get filled. And what I'll be looking for is price to correct sideways. Okay, I'll be looking for a correction on the 15-minute chart. And then I'll be looking to get long on the break of that flag, or within it with a 5-minute risk entry, and I will be able to manage it up to this sharp hook point there for something in the region of 4.2%. And where's my target? That's right. Okay. So then what I would do is I would actually just, depending on what I got, because obviously if I got a risk entry within the flag, the stop loss would be tighter. But if this was a reduced risk entry, my target would be up here. Okay, I don't know why my target has moved, but and then I would use the mechanical management system again, and I would measure from this area of consolidation to there. And in this instance, I would actually set a take profit at this high, okay, because we're the 90% rule will be so close to it, and I would just trail my stops accordingly. Okay, so if this just keeps rocketing to the upside, then I'm not just going to FOMO in, because that's what the amateurs do. Okay, I'm waiting for the consolidation, I'm waiting for price to correct and build volume for the next leg to the upside. Okay, I have set a Google Calendar reminder to remind me to check this pair. I did that just prior to this video, so we'll check that and see how the land lies. Okay, so that is Aussie yen, Aussie CAD. Okay, if I just zoom out. Okay, so we've already tapped into, you can see here that we scooped back round. We broke above this high, okay, and we kind of had this expanding pattern there. We then came down all the way down here. We tapped into that area, broke just below, okay, scooped back round and moved to the upside. We have a near miss here to this high, okay, so that gives me reason to believe that we may be moving to the upside to give us this kind of, this 1, 2, 3 touch structure, which taps into this high, which this high near missed to last time around, where potentially we could be looking for shorts from there. Okay, so if that's the case, then what reason on the lower time frames do I have to think that? Well, you can see we tapped into a sharp move down followed by a sharp move up. There was likely a lot of liquidity here. We tapped into the area immediately. Initially I wasn't sold by this daily close, because you can see it's bearish, and as we know with dollar Swiss, as I mentioned with dollar Swiss at the start of the video, a lot of the time these bearish wicks can be filled before we move to the upside. But you can see we're clearly impulsing to the upside, and we're trading now above here, which is the key ingredient for me. So I'm just kind of seeing this now as that move to the upside to potentially take out this near miss and this high, which we near miss too. So then I'm looking for entries on the lower time frames. I like the fact that we're trading above here as well. Okay, we have a sharp move here. I like that as well. We have a very sharp move up there, followed by a sharp move down. So price will likely gravitate back towards that as well. Okay, and we have a bit of a wick there, just as with dollar yen. Okay, so what I'll be looking for from this pair, just to touch on it, with dollar yen, you can see that the move up above where price currently is, like so from here, the move up on dollar yen was a bit more aggressive on the way down. Okay, whereas with dollar CAD, it's a little bit more corrective. If we just zoom to dollar yen, you can see, yeah, the move up here was much more aggressive. So one of the reasons this is lower down on my list is because if I was to take this, it may move up a little bit more correctively and replicate what happened on the left. Whereas with dollar yen, if it replicates what happens on the left, it would likely move more like that. Okay, so that's another reason why this is lower down on the list. It's not really a negative, it's just a point of observation, point of interest. And so what I'll be looking for from this pair is the following. Exactly the same thing that I was looking for from dollar yen. I'll be looking for price to consolidate sideways. I'll once again set a Google Calendar reminder to remind me to check this. Okay, and then I would look to get long either on the break of the flag or within it, and I'll be able to manage it up to this first high for something in the region of 2%. And then, of course, if we kept going, my target in this instance would be there. There's an area of consolidation there. We would, if we got to that area, we would likely consolidate. Even if we kept going, we would likely consolidate for quite a long time or a period of time, and get something which resembles this, which I wouldn't want to sit through. Okay, so once again, I would use the mechanical management system, and I would measure from that low that we just tapped into, and I would set a take profit there. Yeah, I would set a take profit there at the 90% area, and that would be that's going to be what I'm going to be looking for, folks. I hope you've enjoyed this video. I've tried to go into as much detail as possible with the time constraints which I have. But for now, have a great day, and I'll speak to you again soon. Thanks for watching.